Good morning, everyone. My name is Michael Naidrich, and I am the co-CEO of AmeriVet Securities. As always, I am joined by my partner, all things Fed, rates, and liquidity, Gregory Faranello. Good morning, Greg.
Well, good morning. It's almost, I think it's
Yeah, I
afternoon
guess,
now.
yeah, I
So
guess we're
good
technically
morning
afternoon.
and good morning and afternoon, Michael.
And go Knicks for all our New York City-based clients. That
Oh,
was a
oh my God,
fun this weekend.
what a victory.
It's amazing. 53 years. All right, Greggy, let's get into it. We're back here. New Fed meeting, new Fed chair, right? I think that's one of the big themes here, and how Kevin is going to put his stamp on things. So, let's get in a little bit about the new Fed chair. Maybe before you tell us what it means, maybe I guess what it means, but a little bit about Mr. Warsh and some of his historical precedents that might give us a read on what how he's going to act here.
Well, he's a total pro, completely. He did sit on the Fed board at one point. He has certainly spent time in the private sector as well. So, and I think he's well received in Washington. He is the president's pick at this point. Look, I think short term, if and oil is down like big, and we've been very vocal about that with our clients that we thought oil would come back down. I mean, we're in the 70s, rates are in tow. So, uh, to me, the story with new Fed Chair Warsh, probably less about rates, formal rates, short term. It's going to be more about procedural and how they go forward. And I grew up with Alan Greenspan in the early days of my career. There was no forward guidance. I mean, the guy showed up with, a
A
briefcase
briefcase,
and
yeah, which
yeah,
hand it was in.
and the markets were going, all over the place. And I did well in that period of time. And now we've had this forward guidance and everything's got to be structured. So I think we're going back a little bit in time here, would be my guess. How much we get from him this week, tomorrow, will be interesting. I don't think we'll get all the answers, but I think the direction of travel is going to be pretty clear that we're going back that way. There's going to be less communication from the Fed.
Okay, and that is interesting because I think people are really looking to try to figure him out. So let's get specific to the meeting. I think there's a pretty sort of thought process here that rates are going to stay right where they are. I think that's the camp you're probably in, but what are you seeing here moving into tomorrow?
So I mean, if you look at Treasury rates in general, right now we're lower, and oil is significantly lower. So I think in this window of time, it's more geopolitical than anything else. And we've put out some great pieces in terms of the geopolitical dynamics. I mean, I know you have your views, I have my views, but I think if my view was if oil moves back into the 70s, which we've been a proponent of, and we're there now, rates are slightly in tow. On the flip side of that, we're still running big deficits. The economy is, I think, in relatively good shape. The official inflation numbers are running a little bit higher than expected. But I think what you will hear from him tomorrow is he's going to be looking at inflation from a number of different metrics. So some of that is trimmed mean, which takes out some of the volatility. And then on the core level, I mean, if we continue to come down from here, these numbers are going to come down over the next couple of months. So to me, this is not a story of easing anymore, and the market is actually pricing in rate hikes, but it's I think it's a story of not raising rates, not lowering rates.
That's what I was actually starting to think. I think that is the story, right? Just keeping them right where they are for a while, taking a deep breath, looking at the data, looking at the geopolitical situation, looking at oil. But I think, again, just an opinion, but with him being new, it kind of almost gives him a little bit of a leadway to take that path, right? Where might not have been under the old Fed, he might not have had that luxury, I think.
Yeah, it's a fresh start. And former Fed Chair Jay Powell, he's going to stay on. And but look, I mean, these guys are they're all pros, and I think in the end, uh, I think what you'll hear is he wants less communication from this Fed day to day and less noise. It could create and probably will create some volatility in the marketplace, but I've always said, and you and I have spoken about this like crazy. I mean, it's just like there's good volatility and bad volatility, and good volatility is not a bad thing. I mean, that's the way markets are supposed to behave.
And look, I think it was probably fair to say there's been over-analysis with the Fed over the last couple of years with the tensions, let's just say, between Chairman Powell and this current administration. It got, I think, sometimes off the focus of the actual stuff we needed to talk about, and too much on the personalities involved, and I think that becomes very unproductive, and that's where I think you get that negative volatility as opposed to what you were referring to, the positive volatility.
Yeah, and I think even the president himself, he's been arguing for lower rates now for a long period of time, and I think I understand where that place comes from, because developers, real estate people, they like lower rates in general. He's far broader than that, obviously, but uh, I'm pretty confident that Secretary Bessent
Yeah,
uh,
I think you had
sat
that conversation with him.
sat him down and said, "My friend, my president, we're not lowering rates anytime soon." So, and Kevin he's a pro, and he's going to do the right thing. So, I think it's going to be more procedural short term. It's going to be less about moving formal rates. When you look out the curve, the dynamics change, because if when I look at where growth is at right now, and we could take a little bit of a hit here. When I look at where inflation is at, I don't see anything, and we watch the 10-year very closely. I don't really see anything inappropriate where rates are right now. And I think if oil continues to behave here, I think there's room for 10-year rates to come down. It's not going to be massive. It could be another 20 basis points, but I don't think there's going to be a big duration grab. And you know better than I do on the issuer side. From the investor side, they like it here because there's yield back in the marketplace again, and you're on the road all the time. So
So I was going to conclude with that. Just talk about client activity, and you're right. The investor side is enjoying this, right? There's some pickup that they haven't had for quite some time. But I mean, honestly, we always talk about this. Historically, the rates are just fine, right? It's not perfect from the issuer side, but it's just fine. And if you look at the marketplace, I mean, just yesterday, Nvidia comes with 25 billion. These hyperscalers are all over the place doing this, in massive numbers that 5, 6 years ago would have been considered historic. Now they almost seem regular. You don't even blink at them. And then you look at the equity capital markets. You got SpaceX coming out, and that's performed incredibly well. Came at 135, opened at 150. Last I checked today, it was 205, 206, something like that. And we have the other big AI companies that have recently filed. So capital markets activity is robust, really robust, actually.
which is a great thing. A lot of it is being driven by AI in general, and that's where the market is right now. So I I see things right now as fairly balanced. Capital market activity is good. I look at the rate structure. We're sort of waffling around a little bit. It's it seems fairly contained to me. And I think the overall economic environment, to me, the numbers that I look at, we're not roaring here, but we're holding up pretty well. The employment side seems to be holding up pretty well. And we've got elevated inflation, but we know why we have elevated inflation. I mean, not too long ago, we had WTI crude at $58 a barrel. Now we're back into the 70s. We're probably not going back to 58. But, so you can see these numbers a little bit elevated. But I think as long as the employment market holds up here and the numbers have looked reasonable, they're not, crazy to the upside. I think the economy is in good shape, and I think the policies coming out of Washington are really conducive. So, but
Let's hope we get some. Yeah, let's hope we get some geopolitical calmness, right? And
yes, yes,
let's hope it's real, and we can focus in on some of the positive things here and let the economy do. You've been a very big proponent of the economy's in good shape for a very long time. When
yes,
people were poo-pooing that, you were ahead of that and stuck your neck out, and congratulate you on that. But really interested, moving forward, seeing your comments on the new chairman's first meeting and kind of getting his tonality, how the world responds to it, because it's important. So, it needs to be, it needs to happen, and it's gonna happen obviously tomorrow. I'm looking forward to it. So,
yeah.
we'll see
We've
your.
got milestones, right? I mean, you got a mini peace deal in place. Peace deals they're tricky in terms of how they play out, but we needed to. And, I've been writing, as you need to make some sort of progress getting through the next Fed chair. I think that's another milestone. How he plays it, if I were him, I'd play, yeah, he's going to lay out, I think, his general framework, but transitioning from one regime to another based on what we've had for a long period of time, it takes a little bit of time, but I'm very confident he's going to handle it well.
Yeah, I agree. So, all right, let's get to the meeting. Let's get to the presser. Let's get to your analysis. And as always, I enjoy doing this, and been doing it for God, it feels like 7 years now. I think something close to
It
that.
it is it is seven. Yeah.
It's crazy to me, but it started out in a little office, and here we are virtually being able to do it, which is wild. But appreciate you always, and look forward to hearing your comments. Bye.
Thank you, Michael.
All right.